Senate Bill 1238. Imagine this. Imagine your spouse passes away, and a few weeks later, your car or home insurance renews. You are grieving, juggling bills, and trying to keep life stable. Then the insurance company tells you your rate is going up, not because you filed a claim, but because you are now widowed. What the bill says it does? It says insurance companies should not discriminate against someone just because they became widowed after their spouse died. What it actually does? This means insurers can no longer raise your rate, cut your coverage, or refuse to renew you just because your spouse died, while widowed Texans gain a clear legal protection and insurance companies lose a loophole they could use to charge more after a death. Who benefits? Widowed Texans who need stable coverage and stable bills after a family loss. Families trying to stay in their homes and keep cars insured during a hard transition. Consumer advocates listed in the files include AARP Texas, Texas Appleseed, and United Ways of Texas. Who pays the price? Insurance companies that previously charged higher rates or tightened coverage based on widow status. People who became widowed before effective date because they may have to wait until renewal under the new rules to see relief. Why it matters. When a family loses a spouse, the last thing they need is a quiet financial penalty layered on top of grief. This bill sets a basic fairness rule. Your personal loss should not become a profit opportunity. It also matters because once a pricing loophole is accepted in one situation, it can spread into other forms of discrimination that most people never notice until it hits them. Bottom line, Senate Bill 1238 stops insurance companies from turning the death of a spouse into a hidden rate hike for grieving Texans.